Hey, what's up, guys? This is Andrew from Dividend Growth Masters. So today I want to talk about a very interesting stock, dividend stock, that's in my portfolio. It's been in my portfolio for a few years, and the story has changed a little bit, but it's still a great dividend stock. The valuation is much higher than it used to be, so I wouldn't necessarily recommend buying it now, but it's a stock that I think should be on your radar, especially if you want some exposure to healthcare. So what the company does is they basically do a lot of analytics and measurements for healthcare companies. Um, they do a lot of work with government agencies and private companies as well, private for-profit companies, and they're based out of Lincoln, Nebraska. So kind of close to Warren Buffett, but no relationship at all. Anyways, the company was founded, I believe, in the 1980s by Michael Hayes, who's still the CEO. He's the founder and CEO. He's been in the healthcare industry for a number of years, and the company is pretty well managed. They've been growing at a pretty decent rate, revenue and profit wise, for many years. They pay a decent dividend to, it's yielding about, let's see, 1.22% right now. Not the highest, but the dividend has been increasing for a number of years. So the story with this stock is they used to have two different classes of shares, Class A and Class B shares. But about, I think, 2 or 3 years ago, they went away with that. They converted all the B shares to the A shares. It was a huge process. It was a big recapitalization. But anyways, today there's only one share class left, and that's the Class A shares. So the company, they've been growing at a very decent pace for a while. You can see revenue up from 98 million in 2014 to about 120 million in 2018. Profit has almost doubled during that period of time. Now, what's really great about this business is it's a basically a cash flow machine. So if you look at their statement of cash flows, you'll see they basically have no capex at all. They're generating in 2018, they're generating 39.8 million of cash from operations, and they only invested about 6 million in capex. And that's about the maintenance capex too, because they're not really spending much at all. Most of their business is just analytics, so they don't have any, equipment or buildings or anything that they really need to buy. In terms of the dividend, the yield right now, admittedly, is a bit low. That's due to a few factors. One is mainly the stock price has increased significantly over the past few years. So if you look at the chart, on a 5-year basis, it's gone up multiple fold. But the dividend on the Class A shares has increased significantly as well. It's more than doubled over the past 4 years. So that's a good sign as well. Now, one reason why I like this company as well is because of the CEO, Michael D. Hayes. So his beneficial ownership, so he himself owns about 225,000 shares. That includes shares with his wife as well. But they also placed their shares in a trust too. So that's right here, the name of the trust, which owns almost 30% of the company. The trust includes the family trust and their trust of the foundation as well for charitable work. So they have a decent stake in the company, obviously. What I also like is just his compensation. So if you look at his compensation, he's actually underpaid for a company of this size. The company is about 1.6 billion market cap. He's getting paid about $289,000. His salary is only $127,000. I mean, admittedly, that's still pretty high by any standard, especially in Lincoln, Nebraska. But for a CEO of a healthcare company of this size, he's pretty well underpaid, and he's actually paid less than his president and his CFO as well, which is pretty uncommon for a CEO position. So that's another reason why I like this company. But overall, the company is a little, I would say, overvalued at this point in terms of the valuation. But earnings and profits have been great for the past 5-10 years. Dividend has been increasing at a decent clip too. So if you see this stock at a fair valuation, I would definitely consider it in your portfolio. If you own this stock, or if you've looked at it before, let me know what you think in the comments, or just send me an email.